Hey everybody, it is Chuck Barone on Wednesday, July the 24th, 2023. What a show we got today, guys. So much cool stuff, interesting stuff to talk about today. What a wild day on the market. You see these markets today? Holy crap. Uh, Earnings have been pretty good, actually, really good. Um, 85% of the companies reporting earnings have beaten estimates. The problem is the ones who haven't been beating. Tesla comes up crap. Alphabet, not so great. Ford, boom. So these companies reporting crappy earnings today take the market down big time. These numbers are outrageous. We've been seeing these incremental gains, boom, 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 boom. Now it's a boom, one big drop. I I don't really think it's a sign of things to come. But I talked about it. Remember, I was saying that these seven, the Magnificent Seven, are 70 something percent of the gains in the S&P. Well, guess what? Two of the seven reported crap earnings today, taking the S&P down pretty big. Anyway, before I get rolling, let me take a half a second and welcome everybody to the show. As always, thank you guys for your support. Muchly appreciated. Thanks to everybody on the chat here, the usual guys. We got Para, Wolf, Salty, Attila. We got Dave and Marley. Yay, guys. Sergeant Schultz on now. The usual suspects, guys. These guys are on early every day. Have a little fun with each other before the show even starts. It's kind of cool. Anyway, let's get into the show. Let's talk about these markets today. So the stock market, bad earnings, scare the market, boom, markets come down. The Dow falls 504 points today. Wow, that's a big number. Down 39, down a number now, 39,853 on the Dow, just above 40,000. Got there for just a short little sip, and now back under. NASDAQ down 654 points, 17,342, was above 18,000, boom, right under. S&P, this is the one I watch, down 128 points. That's a big move for the S&P, guys. 54.27 now on the S&P 500. A bloodbath in stocks down across the board. Just a shit day for the stock market, and rightfully so, because earnings are the driver of these markets. We've already talked about on the show how PE, price to earnings, that's how they compute the cost of a stock, right? You got a stock that's making $1 a share, it's selling for $20. You got a 20 PE, right? 20 times price to earnings. PEs have been elevated. There's elevated on there, my man. Touchdown Tommy, how's it going? Anyway, the PE has been elevated into the mid-higher 30s. Now that's all going to come down, guys. Bond market was a weird day today, man. Weird day today. The 10-year falls. So the 10-year prices fall, yields up 5 basis points, 4.28%. The 2-year sits unchanged, 4.43%. So now the inversion narrowing 15 basis points. I think the lowest we've seen since it became inverted friggin' 2.5 years ago was about 14 points. So it's going to be interesting to see how if it goes from inverted to normal. Going to be interesting to see how that typically is not a good sign for the markets, by the way. The dollar today falls 10 basis points on the index, 104.38. It's kind of been stuck here, guys. It's not moving. It just goes up a little, then down a little, then up a little, but stays basically in the same trading trough. Very, very small trough. Still a decent number. Still, anything above 500 is a good number for the dollar index, but not as strong as it was at 106. We got the presidential candidates, especially a certain one wants a weaker dollar, thinks that's going to help with trade somehow. I'm not so sure, but the dollar hanging in there. Metals today. You would think with the dollar coming down, metals would have run up a little bit today, but it did not. Did not. Gold falls $11.70 per ounce, now sitting $2,398.30 for an ounce of gold, so back under 2,400 very quickly. Silver falls 33 cents per ounce, $28.86 for an ounce of silver. You guys have heard me talk a lot about silver needs to get above 30. That's the resistance number. Needs to climb above that and stay there. Oil today, up 50 cents per barrel for West Texas Intermediate, $77.46 for a barrel of West Texas Intermediate. A little bit above our target. We think it should be around 75. The report from the government today, though, showed for the fourth week in a row, U.S. oil stockpiles falling. So there might be a little bit of a supply thing going. We'll keep an eye on that for you guys. Bitcoin today, not much of a day, up $223, sitting at 65,937. Still a very good, strong number for Bitcoin. Going to run up and make a challenge at 70. We'll see how it does. All right, so let's talk about news because I got a lot of stuff to talk about today. All right. Donald Trump comes out today, or not today, but like I guess in the past few days, warning St. Jerome not to be cutting interest rates during the presidential election. Now, it looks like Trump is the odds-on favorite to become the next president. As such, he can try to force Powell out before the end of his term, not reappoint Powell at the end of his term, or reappoint him. So I'm sure Powell likes his job and wants to stay on his good side. So we'll see how this morning goes. But I've been telling you guys, I really have my doubts about rate cuts, in the middle of a presidential election, especially when one of the candidates is Donald Trump. And rate cuts would work against his campaign. I don't know how much a quarter of a point rate cut before the election would really change anything, but it might change the psychology a little bit. We go from, higher for longer to rate cut situation. We'll change the psychology a little bit. I don't think it's enough to affect the election, but apparently Trump does. And I'm betting you $20 Powell takes Trump's advice and doesn't mess with raising rates during the election. Atlanta Fed today says that second quarter GDP, which will come out later this week, should be at positive 2.6% for the second quarter. That's up from 1.4% for the first quarter. So the economy is still showing decent numbers. Not outrageous, but good growth for an economy our size. So GDP probably going to be up when it gets reported this week. Experts also talk, and listen to this, guys. They say consumer spending up 2.5% in the second quarter. It was only up 1.5% in the first quarter, which scared them a little bit, thinking consumers were going to start pulling back. Apparently not. Consumers back strong, up 2.5% in the second quarter. Now, these are what the government's estimating. We'll see what the actual numbers come in when they get reported on Friday. China. Interesting article I was reading about China today and their trade imbalance. Now, we have a trade imbalance too, but ours is the opposite of China's. We have a big, huge trade deficit. China has a giant trade surplus, right? And they're upsetting the entire world with this whole thing. Listen to this, guys. China produces 31% of the world's manufactured goods. So they're about a third of all manufactured goods produced in China. Their consumption, 13%. Okay. So I'm guessing ours is probably around the inverse of that. We probably produce about 13% and we consume 31%. You can see the difference there. Maybe we need to learn a lesson from the United States back when we really were growing into being a superpower, and from what China looks like they're doing as they grow into a superpower. You have to produce more than you consume, or your economy is sooner or later dead meat. And that's the path we're on, as you guys all know. The Magnificent Seven. We talked about these stocks and how much they buoyed up the S&P 500. Listen to this, guys. Those 7 stocks have lost a combined 1.7 trillion freaking dollars in value since July the 10th. That's a big number. Now, who are the Magnificent Seven? Let me remind you guys. Tesla, Google, Microsoft, Apple, Meta, Amazon, Nvidia. Those 7 stocks have been the drivers of the market up or down. Now it looks like we're going to go on the down slope of this thing. $1.7 trillion. What is that in 14 days? Wow, that's a pretty big drop, right? Consumers pissed off now. shopping like never before for auto insurance. The rate of people changing over companies and the rate of people shopping for new insurance, record-breaking levels. Not a surprise to me, man. They raised my insurance 25% on my car, and it's not a new car. Nice car, but not a new one. And 25% increase. I've never had a ticket, never had an accident, never had a claim, never had an anything. If I'm getting 25% increases, imagine what the marginal drivers or the crappy drivers are getting. Car insurance average up 20% year over year. I don't think this is sustainable stuff. Insurance, cars, homeowners especially, up dramatically. Insurance companies taking big losses, trying to find a way to get out of those losses. Electric vehicles, a big part of the problem for car insurance, because they don't want to fix those electric cars. They just total them out. They end up being big losses. If you buy an electric vehicle, make sure you buy that gap insurance, guys, just in case. If your car gets hit and you got an EV, they're going to total that car out. You better either have that car paid off or have the gap insurance to make up the difference between what the insurance is going to pay and what you owe on the car. Analysts freaking out about the inverted yield curve now. As you heard me mention earlier, the yield curve is one of the most significant signals of a coming recession. It has basically predicted every recession since 1950. It's only missed a few times. Well, we've had this inversion for a long time now. 2 years, more than 2 years. I think it's about 2.5 years. I remember we were all convinced a recession was coming. When I was first starting the show, I was convinced of it. The yield curve inversion had me convinced we were on the cusp of recession. We're coming out of COVID. Everything looked really crappy. Well, bad news, guys. Now they're doubting, is the inversion even a useful signal anymore? I would say it is. It is. But it's just not going to be 100% reliable, and neither is anything else in this world. So if analysts confused because it gave the signal that the recession was coming, analysts jumped on that just like I did. Guess what? We're all disappointed in we're not disappointed in the result. I would rather be wrong than be in a recession, right? But that yield curve conundrum, they're trying to figure it out. Business inventories, we're going to get this number later. Business inventories looks like they're going to jump pretty significantly higher up. Inventories growing by 0.7% month over month. That's a big number for inventories. It's going to add to GDP, guys. Business inventories are one of the things that moves GDP higher. If inventories are low, it moves GDP lower. So that's probably one of the reasons second quarter GDP higher than first quarter, because those business inventories were really slack. Now it looks like businesses feeling a little more confident where they can build some inventory and move it in a timely fashion. So inventory is on the rise. Okay, have you guys heard about this new scam? Listen to this crap, guys. Have you heard of surveillance pricing or personalized pricing? This is the new scam online shoppers are dealing with. What they do is they use all your personal data, banking data, your shopping history, payment history, credit, everything that's available to them online to create a personalized price just for you. Meaning, in my estimation, they're going to figure out how much can they gouge you by using your personal data that in many cases you don't even realize is available to them, guys. So make sure, please, to try to protect your privacy online. Everything that's online is public. Sorry, guys. So be careful online and know that sooner or later, they're using these algorithms, they're using AI, they're using all this technology against us, against the consumer, to raise their profits, man. Personalized pricing makes it sound like it's something nice. It isn't. What they're trying to figure out is the maximum amount they can charge you where you will still buy today. So somebody who's a little more affluent, guess what? Even if you're not really more affluent, if you're a shopper online and they can see you're buying a lot of stuff online, paying, they're going to analyze what you're buying. And guys, it's the newest hustle scam you're getting online now. It's just such bullshit. Okay. Real estate. A couple quick things about real estate. 56,000 contracts canceled in June. These are people that signed contracts to buy a piece of property and then canceled that contract before they closed. It was 15% of all contracts written in that month canceled. That is an astonishingly high number. People want to buy real estate. I think they're sucking it up and buying houses, but the longer they have to digest that payment number, which is just out of line right now, guys, that payment number finally convinces them. They're talking to people who are a little smarter than they are, a little more experienced. They are going, $3,000 a month for a mortgage payment, really? So more and more people canceling contracts to purchase real estate. Zombie mortgages, more trouble coming on zombie mortgages. I talked about this before. What they're doing. Okay, remember back in the day in 2008, a lot of you guys on here are probably not, maybe not old enough to remember some of that stuff. A lot of you guys are, though. My audience tends to be a little bit older. In 2008, a lot of the loans, when people were buying houses, we were doing tons of 100% financing. They would get an 80% mortgage for a first mortgage, 20% for a second mortgage. When the big kablooey came, everybody was modifying their loans, but they were only modifying the first. The second was basically a blow-off, a write-off. Well, guess what? Now come along these, what they're calling, this is a new one, favorite, vulture capitalists, okay, who are buying up these old second mortgages for pennies on the dollar, turning those mortgages around, stacking late fees and processing and all this bullshit fees, and then going after the people who signed those loans and foreclosing on houses they've had now for many, many years. I was reading a couple of stories about it. One woman, she took a $50,000 second mortgage, never received a statement on that mortgage. Believe when she was paying her first mortgage, she was paying them both. Wasn't. Now, the second mortgager coming back from out of the grave, foreclosing. The second mortgage was originally for $50,000. They now say with all of their fees and late fees and bullshit, it's $165,000. They need a $50,000 payment immediately, or they foreclose on the house. And people are stuck. There's really not much of a legal remedy. So people getting in now, picking up these houses for super cheap, I don't know, this is not a way that I could make a living and sleep well at night. But you're going to hear more and more and more about this. There's going to be lawsuits starting. This is going to be a big, big deal, guys. We're going to go back and revisit 2008. Fucking great. Because this is not going to go away. The vast bulk of mortgages written back in those days, say 2004 to 2008, when everything blew up, had a first and a second. A huge percentage of them. All those second mortgages are sitting there dead. If this starts working, you think they're going to stop? Or you think everybody that ever had a second mortgage they defaulted on or didn't know they defaulted on going to be getting a notification? So if this is you guys, get prepared for it. If you bought your house with a piggyback, a first and a second, 100% financing back in the day and managed to stay in that house, know if you didn't pay off your second mortgage, chances are you're going to get a knock at the door from one of these frickin' knuckleheads, right? So yeah, not good news on the real estate front. My favorite today, Janet Yellen says, what? There should be no sticker shock at the grocery store. I go to the grocery store every week, but this is a woman, I got to say, 2 words for Janet Yellen. You're fired. You go into the grocery store every week, like you say, which I got to say I have my doubts about, and you're not noticing the price increases, you're either stupid or lying, right? Because even my wife does all the shopping here, but even I can see the price increases. So Janet Yellen proving once again she's completely out of touch with regular Americans. And last, 80% of the companies from the S&P 500 that have reported earnings for the second quarter, more than 80%, 85% have beaten that estimate. Doesn't really matter so much, though, because the Magnificent Seven are going to be the seven that drive this market up or down. So anyway, that's it for the day, guys. A lot of data today, a lot of information, a lot of stories, I guess, more than real data. Starting tomorrow, we'll start getting some real data, jobless claims, and more. So make sure to be here tomorrow when we talk about all that fun stuff. And it's going to be a crazy finish to this week, guys. Now the market's turning down. Let's see if we can get any kind of turnaround and bounce it back up. We'll have to have some good news somewhere. In the meantime, everybody have a great evening. Please hit the thumbs up, the like button. Let's get this video out to more people, have an opportunity to view it. If you like what you're seeing, please hit that thumbs up. I will be in comments today. I'm feeling better. Finally back to my normal ass self. So I will be on comments responding to you guys today. If you got questions or just want to say hi, hit me up. In the meantime, guys, until then, see you tomorrow.